Was it a surprise?
Good to be here. Well, we knew that this IPO would do well. What we didn't know was how well it would do. And as Menaka said, this is a combination of pedigree, of performance across other companies in the group. It's also naturally a sign of the markets.
Sanjiv, it is a neat pile of cash that you're seeing right here. How soon do you think it'll be deployed?
Well, the sector as such has been growing 12-13%, given the requirement for housing for first-time buyers in the country and the promotion that the government is doing to encourage this as well. We see a 13 to 15% growth for this sector in the coming years. As Bajaj Housing, we've been growing faster than that in the past year. And given our own plans, we expect that to continue as well. So the capital that is there with us at this stage, we've diluted about 11%, should take us through for the next few years. And as per our own listing regulations, we have to dilute up to 25% in the next 3 years.
Well, that's going to continue to be an overhang on the stock, but that's when reality sets in, Sanjiv. You pointed out the growth potential for this market, but you're doing business predominantly in the 6-7 fastest growing states in India. So I'm curious to know, as you grow out, to smaller states, how do you sustain both that, growth rate, which is twice the industry growth rate, as well as your lower credit costs and your asset quality?
Menaka, there are two different things. One, if you look at these 7 or 8 states, these currently account for most of the housing market, and our market share there varies in different states, but it's still very low. We're still a new entrant. We're only 7 years old. Of course, we have performed well. So we believe that there is enough opportunity in these 7 or 8 states as well. In addition, every year we'll keep growing. We'll add the next set of cities. Keep in mind that India is growing at 7.5%, which means that some of these states are growing at twice those rates, 2.5 times those rates. And every 3 years, there are a bunch of new towns that are coming up, where we see prospective customers. So I don't see growth to be a challenge at all. The second thing is that when you look at our own business, while housing could be one monoline, these are actually divided into sub-businesses. There are various income segments we cater to, from premium to non-premium. We work with developers for construction finance. We do corporate lease rental discounting. So we participate in every part of that chain. That makes it mutually dependable with the different players there, but also allows us to grow, but grow managing risk. Because we do see cycles in each of these different segments. It will allow us to keep our accelerator on where required, put the brakes where required. And finally, when it comes to credit quality, risk has always been at the forefront of us when we build business. It's a combination of our teams on the ground. It's also a combination of how we leverage data and technology to be able to make more informed discussions on our borrowers' ability to pay.
All right, Sanjiv, we're also going into, I don't know when, but we are going into a lower interest rate scenario that's always helpful to the lending business. But does that in some ways equalize the playing field? You've had access to cheaper, high quality funding, and now some of your competitors, as we move into a lower rate scenario, will also have that?
Well, it's relative, right? So one, I must say that Bajaj Housing Finance enjoys the highest domestic ratings. And this is on its own back. This is without any guarantees from the parent. Of course, being part of the group does help, but I must say it's on their own performance and their own book. When rates start falling, what does happen is that these are all floating rate loans. And as a result, to customers, the rates will start falling. They'll be the same for the rest. It'll be then a question of how well you can negotiate on your borrowing side. And we believe that we are as strong, if not stronger than others there.
Sanjiv, you talk about opportunities, you also talk about risk. Government has come out to say that it is concerned about bad loans, credit card debt. When do you see an improvement in the quality of those assets? And, is there a need for more oversight from the government, you think?
So, Haslinda, credit to GDP in India ratio is at about 37%. This is compared to over 70% in the US, close to 80% in the UK. I'm not saying we need to go all the way there, but at a larger level, I don't see a significant risk. Yes, what can happen is certain smaller segments can see higher leverage, can see higher stress. And this is where, firstly, is the responsibility on lenders like ourselves to slow down. So, for example, in Bajaj Finance, which is the parent of Bajaj Housing Finance last year, we saw for a certain segment in the unsecured lending space, our bounce levels go up slightly and we reduce exposure there. The central bank then came out with a set of requirements to cool down that market. And we believe that credit to those segments have come down significantly in the last few quarters on the back of the measures of the central bank. So these cycles will take place. And for a good quality lender, you have to be able to go through those cycles and come out even stronger. And that's why, as I said, that while we're growing profitably, we are here to build long-term businesses. And that's why we always treat ourselves as a risk-first company.
Put some numbers to that growth projection. Currently $42 billion in AUM in terms of growth in the next 2 to 3 years. What are we looking at?
So, you know, we're still in a regulatory limited period with the information that we can share for Bajaj Housing, and it has to be from our RHP. So most of these numbers are of the last few years where we've grown just under 30% at over twice the market.
But you expect to do better? I'm just looking at, for instance, your performance in the last quarter, loan losses in last quarter, which ended June. You set aside 70% potential defaults, profit after tax at 14%. Can you improve on these numbers going forward?
Well, we have a next quarter coming soon in the next month, so we will know that. I cannot make a forward-looking statement at this point of time.
What are the biggest challenges for you?
For us, the challenge will be very clearly to expand in the coming years in a sensible manner. Second, it's a very competitive market. At this point of time, all the large banks, other than the other housing finance companies, see this as one of the lowest risk segments to lend to. And we have to keep in mind that corporate lending for banks has been soft in the last 4 or 5 years. Hence, they are greater focus on the retail side. I think as India continues to grow in the coming years, corporate lending is restarting. So hopefully there'll be a little lesser margin pressure there. Other than that, we are here to build businesses for the next 50, 100 years. As long as we stay focused on the ground, we take cues on risk as well as opportunities, I think we'll be fine.
Sanjiv, I have a quick question on your real estate outlook. And the reason I ask this is because about 60% of your assets under management are home loans, but you have, and that's a little bit lower than, what your peers have. So you do have a far more diversified loan basket within this one space, if I can put it that way. So what's your take on the real estate pricing side and what impact that could likely have on the proportion of your developer loans in the years to come?
One important factor, Menaka, is in the last year or two, for the first time in almost a decade, we have seen the total inventory of vacant homes come down. And that's a good sign because this is a starting of another cycle of construction and lending to this sector for the coming years. Second, overall, if you look at home prices outside of Mumbai and Delhi, which are two very large metropolises, these have been reasonably steady and growing at a steady pace, which is also good even from an investor point of view. Our own exposure in developers is to a set of about 250, 300 developers who are mid-size, good quality, take one project at a time, have manageable debt levels. And the way we access them differently from others is a lot of the work that we do upfront so that when they have a project in place, we are ready to lend to them at that time. Our speed of completing paperwork is much faster. Our ability to lend to the house owners that are going to come to their project ends up being much quicker. Our entire process of applying and getting sanctioned for a home loan is end-to-end digital. There are, of course, some elements in that have to be physical then, but the rest is all digital. our assessment of customer risk, what is a loan size that we can give to them. Today, we work across our group with over 100, 150 million customers. And keeping in mind the right data privacy norms, we are able to access them for various products.
Sanjiv, massive wealth is being created in India. How are you looking at wealth creation in the country and how you can tap it either through your products or your teams?
India is currently at about $2,700, $2,800 per capita, which means there are segments at $4,000, $10,000, $15,000, $20,000 per capita as well. Because we are, after all, a country of 1.4 billion plus people. So we end up segmenting each of these income segments, and we have about 13 of them across our various businesses. And we create not only products, but we create the entire customer experience, a combination of physical and digital, addressing different customer segments differently, and to ensure that the entire experience of buying and servicing a financial product from us ends up being as seamless, as frictionless as possible. We are very enthused with the Indian economy growing at 7% plus. We think in the next couple of years, we have a chance, if we get our things right, to grow at 8% plus. And what this means is that we are gradually changing from a nation of savers to a nation of investors. And this means investors will want better, smarter, easier to invest in financial products. I believe we are at the start of a very long positive cycle for financial services in India.
So Sanjiv, a resilient Indian economy, you're talking about 7% growth. What do you see the RBI doing then? Some say perhaps, you know what, a move in October, others say no move at all for the rest of the year.
I wish I had a crystal ball there. But as we've heard statements, Haslinda, from the RBI governor recently, he's made it very clear that RBI's policy and that of the Monetary Policy Committee will be driven by what they see on the ground. Of course, they understand and they are exposed to what happens around the world. But I think I saw a little bit of a de-linkage there between what's likely to happen with the Fed. So yes, so the balls are a little up in the air, but we will know soon.